with an increased liquidity cycle and quantitative easing is that the risk assets should rally into those kind of conditions. Maybe not into the first cut. When you cut rates and you implement quantitative easing, after a little bit of a lag, markets go back into bull markets, and specifically risk markets go back into bull markets. For now, I think probably markets are safe. The 4-year cycle is very, very, very much intact.
Ron Neuner joins us today. He is the founder of Crypto Banter. We'll be talking about the recent crypto action and what's driving prices. Welcome back to the show, Ron. A busy week for everybody in the crypto space. Good to see you.
One of those weeks, Dave. One of those weeks. It's
is it one of those weeks? Is this normal? That's my question. So just to recap for the audience, Bitcoin's down from before this big move down. It was at 69,000 just on the 28th of July. And in the last week, it's moved down about 20% now to 56. Bit of a rebound this morning. We're talking on Wednesday, the 7th of August. So it's rebounded from its lows of, at one point, it retraced 49,000. It's back to 56, but just extreme volatility. It's down, basically. So is this normal? Is this one of those days?
So, Dave, I mean, it has been a pretty rough week for Bitcoin. I mean, for those of us who've been here for a while, we're pretty used to this volatility. We're used to, 30% drawdowns in a typical bull market. I think you got to look at the underlying reason as to why this happened to understand whether or not this contagion is going to continue or whether this is the bottom and potentially a cycle buying opportunity. I'm not going to say a generational buying opportunity, but a good time in the cycle to actually be accumulating more Bitcoin.
Okay, let's take a look at the underlying reasons. Well, you use the word contagion. What is contagious about this? It's spreading throughout the rest of the crypto market? Is it starting from Bitcoin? Is that what you're saying?
Well, I mean, I think Bitcoin's coming down, not because Bitcoin's coming down, but because of, because macroeconomic conditions, and specifically the Japanese yen cash and carry trade, which I covered actually before the whole thing happened. I mean, for those people who don't know, the Bank of Japan, who hasn't had interest, or Japan hasn't had interest for the last 30 years, the Bank of Japan, because the currency in Japan is depreciating a lot, and this could cause a lot of inflation, the Bank of Japan opted to raise interest rates by 0.25 basis points earlier this week. Now, the thing with the Japanese yen cash and carry trade, as I covered quite in depth on our channel, is that if you think about environment with no interest rates like Japan, people were able to borrow yen with no interest rates and to invest it in high-risk assets. Now, what are those high-risk assets? Well, they invested in, UST bills at getting 5% return. They invested in stocks, aka the NASDAQ, and they invested in other risk assets. The only thing is that when the Bank of Japan then increases interest rates, all of a sudden, this amount of the loans that you've taken that you thought were going to be risk-free aren't risk-free anymore, or interest-free aren't interest-free anymore. And that means that there's a potential for the trade to unwind. Now, you got to ask yourself then, how big is the trade? And I mean, the trade is anywhere between $1.5 and $3 billion, $3 trillion. And so what the concern was up until 24 hours ago is that the entire yen cash and carry trade would unwind. People would recoup their yen and do this by selling risk assets and then put the yen back into Japan and therefore close their positions. Now, if you look at, I just want to show you the size of the trade here. So I was going to try and get the zoom back. Yeah. So if you look at my screen, which I think is being shared over here.
Yeah.
And we look at the JPY, the USD JPY, which is the Japanese yen. Here it is over here. Yeah. If you look at the Japanese yen against the dollar, what you can see is that the Japanese yen against the dollar had been weakening quite a lot until this happened. This is the 11th of July when the Bank of Japan started intervening, and you can see that the JPY USD had a correction of about 11 or 12%, which in currency terms is obviously pretty huge. Now, at the same time, the Japanese markets, I'll quickly just call it up here. The Japanese markets also, if you look at the date that they started coming down, around the 10th or 11th of July, and you can see that the markets went from a high on the 11th of July all the way down about 30%. But since then, we've had a recovery and we're only about 15% down now. What caused this? Well, what caused this was the fact that the Bank of Japan had an emergency meeting, And in that emergency meeting, what they resolved was that they were no longer going to raise interest rates if they thought that it would lead to market instability. So they're kind of saying, look, for now, we're done with the Japanese interest rate raises. So then that brings us back to, well, okay, then what happens to risk assets? I think the first thing we need to understand is that the problem hasn't gone away, and that the Japanese yen cash and carry trade is still very much there and very much active. So all we've done is we've put a band-aid on the wound, and we haven't addressed the cause of the wound. It's kind of like last year when the crypto market started to rally, when SVB Bank collapsed. I don't know if you remember, but when Silicon Valley Bank collapsed, and it collapsed because of a mismatch between its long duration T-bill holdings and its short duration customer redemptions. And as a result, the banking system was kind of shown to be insolvent because the banks were holding long dated T-bills, which they bought when interest rates were close to zero. As interest rates go up, the T-bills become worth less. And so they have a mismatch in their assets and liabilities. And so then the Treasury came out and kind of said, okay, well, we'll backstop the banks. They didn't make the problem go away, but they made the market reaction to the problems go away. And you can kind of say that Japan's done exactly the same thing here, because the problems hasn't gone away. There is still the Japanese cash and carry trade, where people have borrowed at interest rates of close to zero, and they've invested in Japan, and they've invested them outside of Japan. Only now the Bank of Japan has made I call it a pinky promise, because I think that's how strong it is. Like they've made a pinky promise not to raise interest rates if they think it's going to lead to market instability. Problem is that if the currency, the Japanese yen, continues to devalue, then Japan may get into a position where there's a lot of inflation. And I believe if Japan does get to a point where there is a lot of inflation, well, unfortunately, I think the only thing the Bank of Japan can do is keep increasing. So I think for now, I think probably markets are safe, but I do think that the underlying problem still exists. And so investors in the short term, you may get, risk slightly rallying, but on the other hand, you have to understand that this problem is still there. And so it hasn't been mitigated.
Before we continue with the interview, I want to tell you about another way you can invest your Bitcoins and store them safely instead of using a traditional wallet or an exchange. Consider an IRA. Today's sponsor, iTrust Capital, is one such IRA that offers 35 crypto assets and the lowest trading fees in the crypto IRA space at 1% only. And being an IRA, it also offers unique tax benefits. If you'd like to get started and learn more, click on itrust.capital/David in the link down below, or scan the QR code up here. If you're over 18 and you want to open a new account with cash or roll over an existing account, you can do so using my referral link. And if you use that referral link, you'll get $100 in signing bonuses. Yeah, this is what you're referring to is just today, Deputy Governor Yoshida of the Bank of Japan said that he would not raise its policy interest rate when financial and capital markets are unstable, were his words. This comes a week after the Bank of Japan governor said he would continue to keep raising interest rates. So anyway, last week they said they would keep being hawkish, and then this week I guess they saw what happened per your comments, and they're kind of just putting it on pause for a while. But to your point, if inflation still is hot in Japan, they're not going to care about what happens in the U.S. or abroad. Or they're not going to, well, in their own markets too. The Nikkei was down like 12% one day and then went up 10% the next day. Going back to Bitcoin, though, let me share my screen real quick. So this is Bitcoin, right? And to your point about the Japanese yen, USD, JPY, big correlation in the last couple of weeks when the Japanese yen appreciated, Bitcoin also went down. So yeah, that kind of illustrates the capital flows. I just want to take this out here because one of the questions I've been getting is whether or not Bitcoin has just been following the markets or is repeating the same halving cycle as the past. Because it looks like if I'm zooming out here, it looks like it's repeating the beginning of 2021, 2022 again, right? Double top and then going down. What do you think?
I mean, I don't think I'm not seeing it as a double top. I think it's more repeating the 4-year halving cycle. I mean, we know that after the halving, every 4 years, we get about a period of around between 150 and 250 days of sideways chop movement before the next move up. And I think that this halving is no different. You say sell in May and go away. Specifically in halving years in Bitcoin, the best strategy is to sell in May and go away. I mean, I think since you brought it up, one interesting fractal, if you want to look at an interesting fractal around Bitcoin, is the fractal of well, let me just try and find us a good chart so we can actually see it. But the one fractal that I would be looking at is the fractal of the COVID correction. Again, the COVID correction was very much a halving year. Let me quickly just call up that chart for us. Let's just zoom out on the Bitcoin daily. Sorry, it's going to take just a second just to zoom out.
That's okay.
So if you look at 2020, 2020 was a halving year, as is 2024. And what you can see is that in 2020, you had a slight increase in the Bitcoin price, which if you kind of put it over there, it's actually quite a big increase in the Bitcoin price. And then you had a black swan event. In this case, you had it just before the halving, which was COVID. And I mean, you could pretty much say that this was a little bit of a black swan event, which just happened a month after the halving as opposed to a month before the halving. That said, the 4-year cycle is very, very, very much intact. So, as it is in the 4-year cycle, we usually chop. And then what happens is we continue with the next leg up, And I mean, if you want to correlate that back to fundamentals, I guess the one thing you need to look at is to say, look, I think you got to look at the good of what happened in this Japanese collapse. I mean, you could look at the bad and we'll understand the bad, but let's look at the good of what happened in this Japanese collapse. If you look at the probabilities of an interest rate increase before the Japanese collapse, well, the probabilities were there was a high chance of one single interest rate cut in September. If you look at the probabilities right now of what the market is pricing in, you'll realize that the market is pricing in a double cut in September. 63% of participants are saying that there's going to be a double interest rate cut in September, and then still two more rate cuts this year. So what it feels like the Fed has now been strong-armed into potentially dropping interest rates and increasing the liquidity cycle. Now, I mean, what we do know with an increased liquidity cycle and quantitative easing is that essentially risk assets should rally into those kind of conditions. Maybe not into the first cut, which is what we're seeing right now, but certainly when you cut rates and you implement quantitative easing, after a little bit of a lag, markets go back into bull markets, and specifically risk markets go back into bull markets. And that's effectively, if you look at Bitcoin, for most investors, Bitcoin is probably the furthest down the risk asset scale that they're going to go, and therefore probably quite a good bet into this kind of environment, which correlates with the cycle.
You bring up a good point. The CME Fed Watch tool pricing in 63% chance of a 50 basis point cut. I'm looking at it right now on Wednesday. This is kind of dangerous because the markets are expecting a big injection of liquidity. I personally don't think the Fed's going to cut by 50 basis points in September unless the economy really turns bad. I don't think Jerome Powell's looking at the yen carry trade. But yeah, what do you think?
I agree. I think that the market's being a little bit irrational. I think also the market's being irrational if the market thinks we're getting the equivalent of 425 basis point rate hikes this year with only three meetings. Rate cuts in this year with only 3 meetings left. I think the market's being bullish. I would bet on 1 or 2. So I would bet that federal fund rates at the end of the year are 4.75 to 500, between 4.75 and 500. Which is 1 or 2 base rate cuts, 1 or 2 0.25 bips rate cuts. I don't think we get more than that. I think that I just can't, unless something fundamentally breaks. I don't think anything is fundamentally broken. I think we saw a crack with the Japanese yen cash and carry reversal, but I don't think it's the end of the trade.
Well, the other issue that people were concerned about is a recession fear or fears of a recession in the U.S. with the unemployment rate soaring to 4.3% last Friday. People are now probably expecting lower earnings in the next quarter. That could push down prices. That could push down stocks and Bitcoin. Is that something you're following?
It is something that I'm following. It'd be quite a weird recession if your GDP growth is growing at 2-point-something%, which is what the last year US GDP growth numbers were. That would be a pretty strange recession to me if the recession were to happen. That said, the effects of 5.25% interest must be to slow down the market, and so the market shall be slowed down. And I think it's if anything, it's the Fed probably should have cut rates in the previous meeting.
Yeah.
If they don't cut rates in the next meeting, I think the Fed's going to be behind the curve again. I think that would be a very dangerous place to be, because they're behind the curve on inflation. And I think that the Fed is known to react too late, but I think in this case, I'm hoping that they're going to react on time.
Based on your tone, I'm not sensing a lot of panic. You think the volatility is over for now?
I think the worst is over for now. I don't know if the volatility is over for now. I did actually tweet, and I did actually tweet something, and I want to quickly just call up this tweet, because just to show you where my head has been, not only now when there's a little bit of calm, but yeah, we go. So I'm going to quickly just share the tweet with you. So I made a few predictions. Remember, this is in the midst of the carnage. Markets were down, futures were down like 7 or 8%. I said, look, number one, I think the worst is over, specifically for the Nikkei. By that, I mean markets could still go down, but today was the worst candle down. US markets won't melt down. The close will be better than 2.5% for the NASDAQ. The NASDAQ did close down 2.6% or 2.7% that day. There won't be a Fed emergency meeting, because the Fed doesn't act when one day we have bad markets. And I think we definitely have a rate cut in September. And I think I stick to all of these things. I think the worst is over. Now, can we go through a period of choppiness and maybe the market's going down like another 1 or 2%? Yeah, we can. Do I think we're going to have another day where we have another 10% rate cut, market drop? No, unless something new breaks. But as it relates to the Japanese yen cash and carry trade, not going to happen.
The other thing that some people have pointed out is the VIX having spiked up to 60. The last time it's been that high was COVID, and the time before that was basically GFC. And every single time it spiked up to that level, COVID, and then prior to GFC, it's just telepathing a big crisis. I'm not saying there is one now. I'm just saying that that's been the pattern the last 2 times or last couple of times. So I don't know if that's telegraphing anything now. What do you think?
I mean, I'll point you to 2 tweets here, which I agree with. One is the Bitcoin USD price divided by the VIX is on an upward trend. That is the Bitcoin price divided by the fear in the traditional markets. Effectively, that's if you look at that, and you can see that that's very much on an uptrend. And it just tipped the trend line over here. There is another tweet which I think is worth looking at, and that is let's just see if I've got that tweet here. It's from Dan Tapiero, and he says likely yesterday was the low in everything. Why? The 3rd largest VIX spike in the last 35 years, unwarranted, too extreme given much better macro fundamental backdrop than 08 and 2020. Could the market see a retest? Yes, but the VIX peak is in. And I think I pretty much agree with this.
Okay. If you take a look at the Bitcoin price cycles again, because you brought up halving cycles, in the previous 2 cycles, every single time Bitcoin hit a high, it was substantially higher than the last peak, right? So 2021 reached 67,000 odd, dollars for its highs, and then the previous time was 2017. You remember in December 2017, it was only at like 17,000 or something like that, and then couple of times higher the next cycle. This cycle, however, not a couple of times higher than the last high of 2021. It's only like William went up to 69.70 or just past 70. Are you just worried that these cycles just the magnitude of increases just gets smaller?
Not at all. And again, why? Because I think in all previous cycles, Bitcoin never hit its all-time high. It didn't even come close to its all-time high before the halving, right? In this cycle, the all-time high was coincidentally hit before the halving. Why? Because we had an ETF launch, and the ETF was almost an unnatural force in the cycle, right? Like you had an ETF launch, you had TradFi coming into Bitcoin, the most successful ETF launch in history. Over $20 billion flowed into Bitcoin in this ETF in a very short period of time. That's going to drive price unnaturally up. And that's why Bitcoin broke its all-time high before the cycle peak. Let's go back to the Bitcoin chart and just look at usually in the Bitcoin cycle, when does Bitcoin actually hit its all-time high? So let's say the halving was around here. It was March 2020. So the halving was around here. And the all-time high actually happened in November 2021. So about a year and a half later, right? And if we go back to 2016, which is this chart over here, you can see that in 20, it's probably very small because we're looking at it on scale. But Say the halving was somewhere around 2016. So the halving was, I don't know, somewhere over here. And when did we hit the all-time high? Around November. We had in November, December 2017. So we generally get the all-time high about 1 to 1.5 years after the halving. That is if we're sticking to the halving cycles. This time, we hit the all-time high before the halving cycle even began. Why? Because all of this is probably attributable to the ETF, which was an unnatural force in the Bitcoin market. It wasn't part of the natural market forces in the market. So I think that this cycle will actually play out way, way, way bigger than the previous cycles. In fact, I'm not a predictions man, but if we saw anything under 200,000 for this cycle in Bitcoin, I'd be very disappointed.
When you say this cycle, what do you mean? The next 4 years? Is that what you're referring to?
So again, if you look at what a Bitcoin cycle looks like, what you get is you get the halving, which happens somewhere over here. So this happened in mid 2020. A year and a half later, you usually get the high, and then you get a drawdown, and the drawdown takes you down until probably what we call the beginning of the next cycle, of which we get the halving. The next halving is going to be in 2028.
I see.
So I think this market tops somewhere around end of 2025, somewhere there. So for me, like end of 2025, that's probably where I want to be exiting my positions and, waiting for some kind of correction. If we are to follow the Bitcoin halving cycles, and that's the one metric that I actually am following.
Basically, what you're saying is this is not the top yet. This is a mid cycle kind of, rally. But the real rally is still yet to come. For the reason.
Well, I mean, I'm looking at the charts, and I'm not only basing this on 4-year cycles, and I'm not only basing this on the charts. I'm also basing this on the fundamentals. And again, I'm saying we're going into a new liquidity cycle. We're going into a rate cutting environment. I mean, let me just show you a few slides. And I mean, I wasn't really prepared.
That's right. Bitcoin is correlated with global liquidity. You're right. Yeah.
And here's where we are in the global liquidity cycle. Here is the tweet over here. You can see that we're in the beginning of an increasing liquidity cycle. At the same time, you can also see that we are in an environment of rate cuts, which are happening. Central banks basically are starting to cut rates. And for Bitcoin itself, remember the FTX collapse, which happened in the last cycle? Well, the creditors are due to be repaid about $16 billion in cash in Q4 of 2024. Now, some of that $16 billion is going to be used to repay, is going to be people that bought claims. But a big part of that may just flow back into the market. So I kind of when I add all those things together, I don't know, I'm trying my hardest to be worried, but I just can't be.
How much of this Bitcoin decline over the last 2 weeks was due to the Mt. Gox redistribution?
I mean, it's very hard to put a number to it because, you don't know who sold and who didn't sell, but we haven't seen a lot of selling pressure. Also, the ETFs, who could have sold into the biggest decline in days, actually bought. Like the net position of the ETFs since the decline since the biggest black swan, you could say, which is in this cycle, the ETFs actually landed up buying the dip as opposed to selling their tokens, their Bitcoin. So I don't know. I just as I said, I try and be rational in my approach. But and I do think that fundamentally the yen cash and carry trade is broken. But I don't think that that's short term going to crash markets, and I think in the long term we're going to be okay.
Let me move on to some of the bigger altcoins now. I'll show my screen one more time. This is Bitcoin. I'm just going to correlate this to ETH. So here we have ETH USD, new price scale, and broad strokes, it looks like it's been very closely correlated this year, actually the last 5 years, right? Well, you know this. So my question is whether or not there's an ETH specific narrative here where it's just really just following Bitcoin. I'll let you answer that.
So probably a better way to look at that is to look at the ETH BTC chart, which is the ratio of ETH against Bitcoin.
Okay.
That chart's not a pretty sight at the moment. ETH is weakening against Bitcoin relatively. I'll try and actually call up the chart for us over here. So here is the chart. Let me just quickly call it up here. It's ETH BTC. So that's ETH BTC. And you can see that that's been on a downtrend for quite a while. And now it's at the lows that we haven't seen since April 2021, which is kind of strange because we've just got a ETH ETF, which has been approved. The thing with the ETH ETF is that we haven't had that there hasn't been as much buying pressure from the ETH ETF, but at the same time, there is a Grayscale ETH E Trust, which is the same as the Grayscale GBTC Trust, which has had $11 billion worth of ETH. So we have to wait for that overhang to finish and to hit the market. At the same time, the Chinese government confiscated about 750,000 ETH, which is about $2 billion worth of ETH. And today they started selling them. They confiscated them sometime around 2018 from a scam called the Plus token scam. And it seems like today those tokens actually started being on the move. Let me see if I can just find us something to actually talk about it. So I think it's, let me just see if I've got anything. Let's just have a look here. Here we go. So you've got hundreds of wallets that have been dormant for 3.3 years are moving large amounts of ETH. Here it is. We noticed through the on-chain tracking, we found that these funds came from Plus token Ponzi, which is ETH was seized by the Chinese police during the crackdown on the Ponzi scheme. And so they seem to be in the market and actually starting to move those tokens around. So that could be one of the pressures on ETH. Long term, I'm not concerned about ETH. ETH is a great protocol. It has great usage. And I think Wall Street is going to understand ETH because it's a technology. Bitcoin is a store of value. It's quite a new concept for Wall Street to understand. A digital store of value, quite a weird concept. ETH is just a decentralized internet. It's just technology for a decentralized internet. And I think for Wall Street, it's very easy to understand technology for a decentralized internet. They can price it on the same metrics that they normally price technology. So either it's revenue per user, cost of acquisition per user, et cetera, et cetera. I think ETH's going to be an easy fit into Wall Street. So long term, not concerned about ETH at all.
Solana, some consider it a competitor to ETH. It recently hit, according to this article I'm reading on Cointelegraph, new all-time high against Ethereum, but is 200 SOL price within reach. That's the headline. I'll let you answer that.
So here's a chart of SOL against ETH. I actually wrote here that I thought that this would be the local bottom for a while. And this is what you call price discovery. So price discovery means an asset hasn't been at that price before, and you can't really chart it upwards. And you can see that this chart has broken its price discovery, has broken its top and is now in price discovery. It looks like Solana is the darling child of this cycle. It is the most used blockchain with the most users generating the most fees. It is the fastest blockchain. It is the cheapest blockchain with mass adoption at the moment. And it really looks like Solana is the Ethereum of this cycle.
Okay.
So I think it's definitely one that people should consider having in their portfolios. Definitely.
Can you give us one or two applications being built right now that, I don't know, are exciting for you?
Well, I mean, if you think about meme coins.
Okay. Yeah, that's true. Yeah.
Meme coins are a massive, massive, massive craze in crypto. A lot of fun. People betting on memes. And it's a massive, massive, massive application, and it's all built on Solana. And the reason why it's built on Solana is because it's so fast and so cheap. And so people can trade meme coins. Now, meme coins today is over $100 billion market. And people are just trading it in and out and having fun actually trading it. I mean, I want to just show you a very cool meme, which is, well, you probably won't believe it, but probably worth $100 million today. And to like a normal investor, they will struggle to understand why. But I just want to show you like how crazy and how fun this game is. So the meme's called Smoking Chicken Fish. And this is Smoking Chicken Fish. It's a head of a fish smoking with a body of a raw chicken. And it's a meme. It's all about meme culture. And right now, this meme is trading at a market cap of $68 million or $70 million, as you can see over here. Now, does it really have that value? No, but it's a casino. It's the largest casino. It's a global casino and the largest casino in the world, which for now is unregulated and for probably the foreseeable future is going to remain unregulated. And that's built on Solana. So you're asking me, what's the use case for Solana? Well, it can be anything. Right now, it's trading, and it's specifically trading on meme coins. But there's a lot of other cool applications which are actually being built. I can't really get into the applications on this stream because they're quite technical, because they are the building blocks for a new type of decentralized trading market. So things like liquidity layers, things like clearance layers, things like identity layers. Those things are all being built. And right now, they're being used to trade meme coins. Very soon, they'll probably be used to trade securities, properties, and anything else, any other assets.
Okay, I want to close off on the Bitcoin strategic reserve. You and I haven't talked about that yet because you were on the show before this was introduced. This is Senator Loomis's bill that she introduced. I'll just read it to you. Establish a decentralized network of secure Bitcoin vaults operated by the U.S. Department of Treasury. Implement a 1 million unit Bitcoin purchase program over a set period of time. Be paid for by diversifying existing funds within the Federal Reserve System and Treasury Department. Okay. I'm not sure what these existing funds are. I'll let you comment on that. Affirm self-custody rights of private Bitcoin holders and emphasize that the strategic Bitcoin reserve shall not infringe upon individual financial freedom. I, again, don't know what that means. What do you make of this?
I think it's an amazing, amazing, amazing gesture. I love the fact that senators and Congress people are up for Bitcoin. But a quick Google search of how many bills Cynthia Loomis has proposed versus how many of them are actually passed. Not a good track record. I actually can't find one. There may be. I don't want to give. I don't want to give any of them. I think there's very, very, very few that have actually passed. Is this one going to pass? Well, I think a lot of it depends on whether Trump becomes president or doesn't become president, and whether the Republicans get the Senate and the White House, et cetera, all these things. I think it's a beautiful gesture. It's not something that I'm taking very seriously. I think Trump also proposed that, he wouldn't sell the Bitcoin that the US has got and he'd hold them in a strategic reserve. And that's amazing. We want that. We want a pro-crypto regime. We've suffered with a or an anti-crypto regime for a long time. And I think it's time for the US to change. And I think every single person in crypto is hoping that we get Trump and we don't get Kamala Harris. And therefore, another 4 years of Elizabeth Warren, another 4 years of Gary Gensler, and all the other devils that come with it.
Have Democrats made any gestures similar to what we've been seeing from the Republican side?
Well, I don't know if they need to make gestures, because the gesture is that they've been in power for 4 years, and it's been absolute carnage for crypto. So
that's what I mean. Have they done anything recently to show voters that they're going to be less,
Well, loosely, people mentioned that Kamala Harris's people had contacted them to make amends with crypto people. I think it's too little, too late. I don't think they can turn around the crypto vote 2 to 3 months before the election. I think they've lost this one. Well, they've lost the crypto vote. Maybe the rest of the votes will actually help them. Obviously, being in crypto, I'm kind of hopeful it doesn't happen, but you don't know which way things are going to go in the United States.
All right, I'm going to show you one more thing before we go, Ron. I interviewed Jim Bianco of Bianco Research, and this is what he had to say about the strategic reserve. Take a listen. I'd like you to react to it, please. You tweeted this on July 31st in response to Donald Trump's announcement at the Bitcoin conference in Nashville. I don't understand why the Bitcoin community wants this so badly. So why is this so bad? Why is this a bad idea, Jim?
Because the Bitcoin community thinks that the government is going to borrow government bonds. They're going to sell government bonds, and they're going to raise interest rates. And then they're going to take all that money and they're going to plow it into Bitcoin. And they're never going to do or say anything to the Bitcoin community. No, we're just going to buy it. We're just going to hodl it for 50 years. And we're going to see where it goes after that. Every time the government steps in and does something like this, they put rules on it. They're going to decide what is the appropriate price for Bitcoin, and they're going to sell it when it's too high. They're going to buy it when it's too low. They're going to decide who owns it. And at the end of the day, those rules do more harm than good.
What's your response to that?
I don't think that the US government decides who buys gold, who sells gold, who owns gold. I think that, more and more there is a separation in the world at the moment between the BRICS countries and the G7 countries, and there's many other separations in the world. And I think gone are the days where one government can decide who holds and what they hold and what has value and what doesn't have value. Yes, they can be a force, but in an asset that has true scarcity, if there's a willing buyer and a willing seller, that's all that matters. And so I think that this is not something that they can control. Also, this is not something that they can seize. This is not something they can lie about in terms of who's holding strategic reserves, which has happened in the past. Everything's on chain and everything's verifiable. So I think, I mean, he has a very small point there. It's not something that would keep me up at night.
My only concern with something like a strategic reserve for Bitcoin is that if the government sells, it could really move the price. We saw that with oil.
I don't think there's going to be a strategic reserve for Bitcoin. Let's get our terminology right. And the reason why it's never going to be a strategic reserve is because what do countries have strategic reserves of? Well, effectively, it's oil and energy. And what is that? Why is it called a strategic reserve? The strategic reserve is there that in the event that for some reason the United States doesn't get oil, there is a strategic reserve that they can use to power up everything that they need to power up to keep the lights on. That's effectively what a strategic reserve is. This is not a strategic reserve. This is a holding diversified assets on their balance sheet. It's not a strategic reserve. There's nothing strategic about it. It's just an investment. It's an investment that the US government would keep on their balance sheet. That's it. And hope that it appreciates like a gold investment appreciates. It's certainly not part of a strategic reserve. I think the terminology is all wrong.
You think companies, like private companies in the S&P, for example, are going to start holding Bitcoin on their treasury for some other reason, diversifying their assets?
I mean, I think it would be an amazing idea. I think every company should keep a small part of its cash reserves in Bitcoin. But again, it's just, companies need to decide whether what their time horizon is and what their risk tolerance is. Bitcoin is quite a quarter to quarter. It's quite risky. And I mean, recently they changed the FASB rules in the United States, which says that you can mark Bitcoin to market after a decline. And so it's become slightly more attractive for people to hold Bitcoin or for companies to hold Bitcoin on their balance sheet. That said, it's the same as why do companies not hold gold on their balance sheet? Because, companies, if they're investing their treasuries, that's great. Then Bitcoin should be part of what you're investing your treasury in. Should you keep your treasury in a risk asset, any risk asset? I'd argue no. I'd argue keep your treasury. If your runway is in USD, keep your treasury in USD and don't take risks on your runway. But again, it all depends on treasury management for the individual companies.
Very good thoughts, Ron. Always good to have you to break down crypto markets for us. Where can we learn more from you, your channel? Great channel, by the way. People should check out Ron Neuner's channel, link below. Yeah.
The live every day on Crypto Banter, also on Twitter @CryptoManRun.
Yeah, a lot of informative tweets all day long. Thank you, Ron, for keeping us informed. Check out Crypto Banter, link down below. We'll see you next time, Ron.
Thank you, Dave. Ciao, man.
Yeah, thank you for watching. Don't forget to like and subscribe.